We have Amazon Web Services. We're going to have a changing of the guard there too. But in the big picture of how Amazon's developing, I feel like Amazon's just ever evolving.
Yeah,
really.
So they've had a change of CEO in Amazon Web Services this week. Adam Silipsky stepping down,
Right.
Matt Garmin taking over. Laura, big numbers. Their latest earnings, reported 22.2 billion for Q1 2024. That was up 16%. Not as good as we were seeing with Microsoft and with Google Cloud at 22 and 31% respectively, but still solid numbers. That gets them to almost $100 billion as a cloud business for this year. Huge business that they weren't even in 18 years ago. To grow a $100 billion business in that short period of time, just fantastic performance by those guys.
I was surprised, and thank you for all of that. I was surprised, too, to see Amazon and Google have this funded EV startup, and they're trying to get some of Tesla's laid-off employees. I mean, when I think about Amazon Web Services and all the things that Alphabet Google is doing, I just didn't. And I know they had this other thing that they acquired, that Amazon had acquired back in, a few years ago, Zoox or something, but now we're going to hear more about EVs from, Amazon and Google. Not what we expected, I think.
From an Amazon perspective, they've got a partnership with Rivian.
Yeah,
obviously a huge delivery fleet.
Right.
Really strong focus in the Amazon group and in Amazon Web Services on ESG and what they're doing with their environmental footprint. So I think you're going to see more from those guys. We're talking about drone deliveries with those guys,
right.
But I think the Rivian partnership for trucks is going to be crucial.
Amazon reported strong 2024 Q1 results, exceeding analysts' expectations for both revenue and earnings per share. This continues Amazon's trend of consistent growth, even though the company is already massive with a nearly $2 trillion market capitalization. But recently, Amazon stock has been experiencing some volatility thanks to some news from the company, including AWS getting a new CEO and the company's CEO of worldwide Amazon stores, Douglas J. Harrington, selling $1 million worth of shares. However, the CEO and lead tech analyst for the IO fund, Beth Kindig, is seeing past the short-term volatility and thinks that Amazon will hit $2 trillion soon thanks to two catalysts. In today's video, we're going to tell you what these two catalysts are, so you can decide if now is the time to go all in on Amazon stock. But before we do that, if you want to keep up with Amazon's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
But not least, Amazon's on your radar. Tell us about this one.
Yeah, this one's trading currently 186 and change. 52-week high is roughly 191. And I'm very optimistic about this. I know they've had some changes there around the C-suite. Some executives the chairs are moving a little bit as of late. But I do think there's just a lot of optimism around Amazon. I think this is a very strong name. I'm a bull at these levels. Anything really just buying stock around the 185 level or below, because I do think we may get a bit of a pullback, maybe some profit taking as we are approaching those 191 levels, not that far away. And I'll be looking to possibly buy a dip.
According to Kindig, advertising is one of Amazon's biggest growth catalysts right now. The analyst points out that it's Amazon's fastest growing segment, with 24% year-over-year growth to $11.8 billion in revenue in Q1. Amazon recorded its first $10 billion ad revenue quarter in Q4 2022, and now has reported 4 quarters in a row above $10 billion, which shows how rapidly this segment is scaling. She also said that analysts are already optimistic about the revenue trajectory and potential for Prime Video ads, which launched in January of this year. For reference, Netflix reported 23 million monthly active users globally a little over 1 year after it launched, but Amazon is taking a different approach to ads than Netflix, Disney, and others. Instead of offering a cheaper, ad-supported tier, Amazon is adding ads to all Prime Video members and offering an ad-free plan for an additional $3 per month. By putting ads directly in front of more than 150 million viewers, Amazon can benefit both from ad revenue and incremental revenue from subscribers who pay the ad-free upcharge. In fact, Bank of America analysts estimate that Amazon could rake in $3 billion in advertising revenue this year from Prime Video, potentially up to $5 billion when including those users who pay the additional charge. And Morgan Stanley is a bit more optimistic about Amazon's new initiative, forecasting $3.3 billion this year, $5.2 billion in 2025, and $7.1 billion in 2026. So, analysts are very bullish on Amazon's advertising potential, but there's one other catalyst that's going to boost growth for the company for years to come, and we're going to explore that now. Hello everyone, and welcome back to Investocracy. Many analysts are extremely bullish on Amazon's AWS business, and Kindig points out that it saw 17% year-over-year growth in the quarter, as CEO Andy Jassy attributed it partly due to the combination of companies renewing their infrastructure modernization efforts and the appeal of AWS's AI capabilities. However, growth has slowed rather dramatically since early 2022, where AWS was reporting growth rates above 30%, but at a scale bigger than $100 billion, AWS is driving the largest absolute dollar growth across the entirety of Amazon's businesses. The analyst points out that in Q1, we saw evidence that AWS is benefiting from strong demand for generative AI offerings, with management optimistic that increased capex will continue to bear fruit in terms of growth. And interestingly, operating expenses for AWS declined year-over-year from $16.2 billion to $15.6 billion, which helped increase operating income. In addition, rival Microsoft explicitly pointed out that Azure does not have the GPU capacity to meet demand, while Amazon also implied that demand is possibly higher than capacity of both third-party GPUs from NVIDIA, as well as for its custom chips. Management noted that in the quarter, they continue to meet growing demand for AWS chips and explained that a meaningful year-over-year increase in capex in 2024 is being driven by high generative AI demand. Additionally, the analyst said that Amazon is working to improve availability of its in-house chips while also expanding its data center infrastructure and purchasing more GPUs to continue to meet high Gen AI demand. The end result is that AWS will likely accelerate again in future quarters as supply comes online. So how will this impact Amazon stock? Let's find out. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Amazon. That said, back to the video.
Hey, what about Amazon? 186 today. Ben, look at the technicals, the chart. Your thoughts?
Yeah, this is another bullish pattern playing out, whether you're talking about the price activity we've seen since the beginning of the year or going back over the last year plus. I mean, multiple timeframes exhibiting some strength, a little bit of concern associated with the recent test up around 190, 192, a bit of a double top up there, but that just provides us with a really well-defined upper extreme, right? To gauge strength, should we break above that level or hold below in terms of continue to consolidate here. But right now, this is the market that's forming acceptance at this upper level. Let's take a look at the charts. You can dive into it with me and see a very well-defined trend. If you remember, it was back in the beginning of January, we were around 144. We've rallied all the way up to 190, well, just shy of 192. Again, with the broader market, you could see a dip that came into play as we pulled back, right, into and took out those lows from back in March. In April, we saw some declines into those February levels, the gap that we saw back in end of January, February. Look at this, a nice recovery here. I did mention a bit of a double top that's starting to play out, which I'd be a little concerned about, especially if we just kind of, the more amount of time that we spend in this range. But in all fairness, a range is a healthy thing in many ways for the bulls as long as they hold above, again, that low that we saw last month. That was down around 167, 168. So let's move away from this. Look at some of the price activity since the beginning of January and just add a little bit of time onto this chart, because you're going to see as you do, a pretty well-defined situation that's been playing out here where value has been and continues to be moving higher. Again, just kind of stepping back and looking at these areas as ranges that have formed in the staircase-type pattern that's playing out to the upside. Yes, you can also see that really pronounced double top that's up here. But yeah, I think this still looks a bit of a bullish pattern playing out. Looks like the longs remain in control, and as they continue to be rewarded here, there's no rejection of this upper level as of yet. This chart, I think, is one thing you can pull away from for sure.
AWS and advertising are poised to finish 2024 at a combined $160 billion annualized run rate, or 25% of Amazon's estimated full-year 2024 revenue. The two segments may help unlock more value for Amazon, given the gross and operating margin expansion the two segments are driving. Kindig also points out that though AWS growth is lower than the growth of competitors like Azure, Google Cloud, and Oracle, it has one of the strongest margin profiles, with a 37.6% operating margin in Q1 and a 30.6% TTM operating margin. Turning to ads, this segment is on pace to hit $60 billion in revenue by year's end. And combined, Amazon's two fastest-growing segments could be viewed as worth at least $1.26 trillion, while also driving significant gross margin and operating margin expansion. When combined with Amazon's remaining e-commerce and subscription businesses, which could be worth $1.2 trillion, according to the Analyst, there is room for Amazon's valuation to expand towards the $2.5 trillion threshold. However, this outlook is reliant on AWS maintaining this revenue acceleration, as well as ads and AWS driving continual margin expansion. Therefore, Amazon stock seems like a great investment. The company delivers stunning performance, and one great thing about it is that the company is reinvesting heavily into its business and at a high rate of return. As a result, the decent growth in its earnings is not surprising. That being so, the latest analyst forecasts show that the company will continue to see an expansion in its earnings, which would definitely result in Amazon stock getting a boost. But what do you think? What are your expectations for Amazon stock? Let us know your thoughts in the comments section. If you would like to know more latest updates about Amazon and what it's been up to, then go ahead and click on the next video on your screen. See you there.